The banks may collapse or fail for various reasons, including economic downturns. If there is a recession or economic downturn, banks may suffer losses due to defaulting loans or decreasing asset values, which can lead to insolvency. Mismanagement. Poor management decisions, such as excessive risk-taking or inadequate risk management, can lead to losses and eventual collapse. Fraud. Fraudulent activities, such as embezzlement or money laundering, can lead to significant financial losses and erode public trust in the bank. Regulatory issues. Banks are subject to various regulations, and violations or non-compliance can result in significant fines or penalties, which can affect the bank's financial stability. Cybersecurity threats. Banks are increasingly vulnerable to cybersecurity threats, such as hacking or data breaches, which can lead to financial losses or reputational damage. Liquidity issues. Banks need to have enough liquid assets to meet the demands of their depositors and lenders. If a bank experiences a sudden rush of withdrawals or loan defaults, it can quickly deplete its liquid assets, making it difficult for the bank to operate. This can lead to a liquidity crisis, which can eventually lead to the bank's collapse. Interest rate risk. Banks are exposed to interest rate risk, which means that changes in interest rates can affect the bank's profitability and financial stability. If interest rates rise, it can increase the bank's cost of borrowing and decrease the value of its fixed income securities. Conversely, if interest rates fall, it can decrease the bank's interest income and affect its profitability. Systemic risk. The failure of one bank can have a domino effect on other banks and the overall financial system. If a bank collapse leads to a loss of confidence in the banking system, it can lead to a widespread panic and bank runs. This can lead to a systemic risk, which can have far-reaching consequences for the economy. International events. International events, such as political instability or trade disputes, can also affect the banking sector. For example, if a bank has a significant exposure to a foreign country or currency, it can be affected by changes in exchange rates or political risks in that country. Overall, the collapse of banks can be caused by various factors, and it is crucial for regulators and policymakers to monitor and address potential risks to the banking system. Effective regulation and risk management can help prevent bank failures and protect the stability of the financial system.